As we're getting closer and closer to the big day, August 28, NVIDIA will report their quarterly figures, and of course, all the attention will turn to guidance. Is guidance still up to par with what the market is expecting? Is guidance still good enough for this company to be trading at a market cap of $3 trillion, a forward PE of 42.1 times? Is it going to be enough? Are the analyst estimates going to be met, or are they going to be revised on the way down? Now, since the last video of NVIDIA was, of course, when it dropped under $100, since then the stock is back up at $124. So if you bought that dip under $100, you're up close to 30%. Now, yeah, it's true that in the last month or so, NVIDIA stock did have some weakness. Most semiconductor stocks were down. It's now down 3% since last month, but year to date, stock is still up over 150%. Year over year, it's up over 183%. But let's talk about what might happen, not what has happened. Just for the sake of comparison, in the next couple of videos, right now the average analyst price target sits at $140, representing 12-13% upside from the price we're at today. And yes, of course, right now it comes at no surprise that from a forward PE standpoint, we are extremely close to the 5-year mean. EV to EBITDA, we're still lower. Price to sales, we are quite high at 23.3 times. Price to free cash flow, quite close at 77.8 times, but that's in the last 12 months. But price earnings to growth, still 1.15. So in my eyes, not the most expensive out there. Of course, that's because the expectations are that they will continue to grow and grow quite fast, still have the majority of market share. We know that every big tech company will continue to spend billions and billions of dollars. And where do you think those billions of dollars are going? They are going to the market leader. Of course, they might be trying out AMD chips, maybe some other chips from some other companies, but since NVIDIA does dominate the market, some analysts are saying, we're going to look at the chart a little bit later, 85 to 90+% market share. So when you hear Meta, Google, Amazon, Microsoft, all of those companies talk about, Tesla, XAI, all of those companies talk about spending billions and billions, building out more data centers, you know that the majority of that money goes to NVIDIA. Of course, it's true, some of them are developing their own chips, some of them are designing their own chips, which is, of course, something you need to keep an eye on for the coming 5 years or so. Because remember, just because you have an idea to go and compete with NVIDIA does not mean that you will be able to compete with NVIDIA tomorrow, next quarter, next year. These things take an insane amount of time. Guess what? Everybody's using the same company to make those chips, right? Everybody's going to TSMC. So, of course, TSMC is a no-brainer investment right now because it doesn't matter what company is going to dominate the chip market. Eventually, they will all need the top of the top. And they will go to TSMC. Maybe in the future, hopefully me as an Intel shareholder, hopefully in the future they will call Intel and ask them to make the chips as well. But today it's all going to TSMC, and then the majority of the chips, the GPUs, are coming from NVIDIA. But what we need to talk about is the expectations right now, what has been happening. Super investors have sold some shares as well. So let's talk about all of that. Hit all the buttons, like, subscribe. If you're new here, you can always unsubscribe later, but maybe only unsubscribe after we've reached 100,000 subscribers. So thank you very much. If you want to support me even further, do check out the links down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/gotchainvestor. Thank you very much. So let's start with the guy in the thumbnail, Stanley Druckenmiller. Of course, legendary investor. So he did cut his position in NVIDIA, not just in Q2, but already in Q1 as well. He said we did cut that and a lot of other positions in late March. I just need a break. We've had one hell of a run. A lot of what we recognize has become recognized by the marketplace now. He first bought NVIDIA shares in the fourth quarter of 2022, admitting that I didn't even know how to spell it. So AI might be a little overhyped now, but underhyped long term. The big payoff might be 4 to 5 years from now. He also talked about strategy, investment strategy, investing discipline. So Druckenmiller believes that good investors are successful not because of their IQ, but because they have an investing discipline. And this is what I've talked about in the past quite a lot. Yes, it's true, you need to be let's say, smart. I mean, you just need the basics, right? The basics, math skills, economical skills, finance skills, stuff like that, to be able to analyze and understand the company. Then, to hold a company, when it's down 30, 50%, has nothing to do with how smart you are. It is investment discipline. And the same when things go up, right? He talks here a bit later about going all in when you are very, very convinced about an investment. The basics of the basics, everybody can have. The basics, everybody can learn. But then when you put the money on the table, when you open up your position, it's really up to you. Do you have the stomach to go through a 50% drop? Do you have the stomach to keep holding your stock even if it's up 50%, 100% in a short period of time? That's when the people that have the stomach, I've made these mistakes in the past, right? I have sold NVIDIA way too early. Why is that? Because I was up 300, 400% or so. But why did I sell? Did the business change? Did it become worse? No, it did not. I just saw a huge amount of money suddenly. Not suddenly, it took a while, but I saw a huge green. And I was like, okay, good enough. Of course, I missed out on another 3, 4x. Lesson learned, right? Yeah, lesson learned. At least I didn't lose money. I lost potential money, but it's better to lose potential money than actual money, in my opinion. But again, the basics of the basics you can learn through these videos, through other videos, through books. But then it's really up to you. It's really up to you. That's in my opinion, the majority of all the investment journeys. Now, you might ask yourself, okay, why did he sell? Does he think that it's over right now? Well, he then talked a little bit about bulls make money, bears make money, and pigs get slaughtered. Meaning, don't be too greedy. That's my interpretation of this. Don't be too greedy. They've made a lot of money with that NVIDIA trade. And right now he said he needs a break, which is totally fine because when you manage that much money, when you are very successful in your investment, right, in a short period of time, only 2 years or so, then yes, it's true that mentally you're like, okay, look, we've already outperformed by quite a lot, maybe made even more money than we thought we would in the next 5 years or so. So, okay, they sold. Maybe they want to sit on the sidelines. They invested in some other companies as well, sitting on the sidelines and looking at what will happen in the coming quarters. If they see, look, this thing is far from over, we can jump in. That's, of course, a difference between a retail investor and someone that does invest with billions and billions of dollars. He also talked a little bit about how he started. So, by the way, he did work for Soros. So, Soros has taught me that when you have tremendous conviction on a trade, you have to go for the jugular. It takes courage to be a pig. So, that's what I did, even though he said here he didn't even know how to spell it. Apparently, the conviction was quite high. They bought a lot, and, well, the returns were quite something. And here you can basically see the trades in the last couple of quarters. So in Q2 2024, sold 87.8% of shares. In Q1, sold 71.5% of shares, so around 4.42 million shares. And he's not the only one. He's not the only super investor, billionaire investor that has sold in Q2. So David Tepper from Appaloosa Management reduced again by 84.39%. Mears & Power reduced by 3.67%. Lee Ainsley by 2.86%. These are, by the way, billions of dollars worth of portfolios. But two did buy. Viking Global Investor did buy 1.3 million shares. That's a huge, huge portfolio. So it's still quite a small position. But you have seen more sellers than buyers. You have seen a lot of insider selling as well, right? It's not always a red flag because insiders have sold for quite a while now. And NVIDIA kept going up and up and up. So yeah, it's not always a red flag. It's something you can look at, fine. But I don't always see, oh, insiders are selling, red flag, we have to sell. No, because if that was the case, you would have sold a year or two ago when insiders sold. And since then, the stock, is double, triple, maybe even more, right? So you have to take that into consideration. Then, now that we're approaching the earnings report, now that we've learned about potential Blackwell delays and all of that, look at the big picture. Look at the AI market size, the expectations of it for the next coming years. By 2030, it could reach $826.7 billion. Right now, 2024, it's at $184 billion. And when you know that, well, these were numbers by the end of 2023, I don't think they've changed that much. And even if NVIDIA lost a little bit, back then they were at 92% data center GPUs. Let's say they lost 2%. Let's say they lost even 7%. So they're at 85%. 85% of these numbers in the coming years is a lot of money that will flow into NVIDIA. Of course, it might be that in the coming years, their market share goes down and down. I think, that's just my opinion, I think, yes, maybe market share-wise, they might have peaked. That does not mean that they will not make a lot more money in the future. Because remember, NVIDIA, while everybody thinks it is only a hardware thing, it has software margins for a reason. One, pricing power, and two, well, actual software. CUDA. They have software that actually works with their chips, and of course, if you're building out data centers, if you're building out products thanks to their NVIDIA GPUs, you're running their software as well, you're running some models as well, and that will continue in the future. Because imagine in the future, like, okay, we actually want to switch. Are you going to switch everything? Probably not, right? Probably not. You're going to stay with NVIDIA. Plus, humanoid robots, electric vehicles, robotaxis, expect NVIDIA software and hardware in those products as well. Now, to end, or before we end, just want to touch on an analyst comment here. So the semiconductor giant is expected to report second quarter results on August 28. The consensus estimate called for earnings per share of 64 cents on revenue of $28.54 billion. The analyst here said of Jefferies says the bigger shift though is early volumes of Blackwell in Q4 and larger ramps into the back of the first half could look closer to small volumes in the first half and larger ramp in the second half. I've talked about this in the last video. I've talked about, well, showed you the comments from Jensen Huang saying that they expect a lot of revenue of Blackwell in 2024. If the delays are real, are we going to see a lot of revenue of Blackwell in 2024? Probably not. He continued by saying here, shorter term, the length and impact of the Blackwell delays are pushing out some of the revenue upside from Blackwell, with investors trying to parse out to what degree. Longer term, the debate has shifted from MVL volumes and content to the mix of DGX versus MGX configurations. The analyst further added that demand for the company's Hopper chips remain robust, and inventories and continued production could help bridge the gap to NVIDIA ramping Blackwell. Talking here about H100, H200, which were still supply constrained in the previous quarter. So that could definitely help NVIDIA. And to be honest, of course, you had that opportunity already to buy under $100. If, let's say, there is some weakness in guidance in the comments for Blackwell, the stock could definitely go down, and that's a short-term thing. I think that's an opportunity. Of course, I don't know if we're going back under $100. I don't know. I don't have a crystal ball. But like I said back then, I'm saying back right now, I don't expect NVIDIA's business to start struggling anytime soon. We don't expect any of the big tech players to start, well, spending less either. They've all said the same thing. They will continue to spend and build out their data centers. So, NVIDIA, whether it's short-term weakness or headlines or China or whatnot, if there is weakness, take the opportunity. Or you can also, of course, go to ASML, to TSMC, also great options. And so right now, to finish it off, we can see that, well, in the last 2 weeks, we didn't go under the 200-day moving average, but we were quite close to the 200-day moving average. Then we've got that rebound. We're now well above the 20 and the 50-day moving average at $124. RSI is quite high, not overbought just yet. But as I said in the past, just because you're overbought does not mean that the stock cannot go higher, as you've seen here at the start of 2024. So overall, that's about it for me in this video. Of course, do share your thoughts down in the comment section below. Like, subscribe, hit all the buttons, and I'll see you all in the next one. Bye-bye.